Hello and welcome to the Weekly Forex Outlook at xm.com. We'll be discussing how the US dollar has been doing after the Fed decision, upcoming US data, and the RBA meeting on Tuesday. I'm Maria Pachardis, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, this week the spotlight was on the Fed. Can you tell us how markets reacted after Powell's remarks and how the upcoming ISM non-manufacturing data due on Monday may impact the dollar?
Certainly. Hello, Maria. Look, it was a big week for the US dollar. We got a rather eventful Fed meeting in the sense that the Fed tried to downplay speculation that it would cut interest rates in March. In fact, Chairman Powell went out of his way to stress that cutting rates in March is not their base case scenario. And he argued that yes, inflation has declined, but we are still not fully confident that it will stay lower. And he pointed to solid economic growth, resilient consumer spending, a tight labor market as factors that could keep inflation burning hot above 2% for some time. And the overall message from Powell was, yes, we're going to cut interest rates this year, but not quite as quickly or as rapidly as the markets have been pricing. And as a result of this, Maria, we saw traders scaling back bets on a March rate cut. The probability for a March rate cut fell from 60% ahead of the Fed decision to around 35% afterwards. And that translated into a boost for the US dollar, but it was short-lived. The dollar couldn't sustain those gains. And there's a couple of reasons behind that. One of them is the market didn't really change its view on the total amount of rate cuts that will be delivered this year. We simply pushed back the timing. So the market is still pricing in nearly 6 rate cuts for the year, but the market now thinks they're just going to be delivered later in the year. Now, we also saw a sharp decline in US bond yields. That was another element behind the dollar's inability to rally. Lower bond yields, of course, diminish the dollar's interest rate advantage. And the reason behind that may have been some concerns about the health of US regional banks. We saw some very poor earnings results this week, and that may have renewed concerns about the US banking sector. Now, looking ahead, as you touched on, we get the ISM non-manufacturing PMI on Monday. That's a very important leading economic indicator, and forecasts point to a meaningful increase in January. Now, if that's the case, that could paint a more rosy outlook for the US economy, and therefore the market could continue to unwind some of those rate cut bets, and that in turn might help the dollar to get some momentum back.
Moving over to Australia now and the Reserve Bank. Back in December, policymakers discussed another rate increase, but decided against it. What has happened since then, and what are we likely to hear from the RBA on Tuesday?
Yeah, so the minutes of that meeting in Australia showed that the Reserve Bank discussed a rate increase. They decided against it. Now, since then, Maria, incoming data in Australia has been on the weaker side. We saw inflation slowing very sharply in the fourth quarter. The labor market lost jobs in December, and consumer spending was also disappointing during the holiday season. So the question heading into this Reserve Bank of Australia meeting is, are they going to keep further increases on the table, rate increases? And the point, though, is even if they keep the option of raising rates on the table, it's becoming clear that it's unlikely to happen. The domestic Australian economy is losing momentum. Australia's largest trading partner, China, it's also in bad shape. We've got the implosion of the property market there. So even if we see the Australian dollar spiking higher on the RBA decision in case they maintain their tightening bias, I think that the overall outlook for the currency is quite dark, and I think investors might need to see a meaningful recovery in China and in commodity prices before the Australian dollar can stage a sustainable rally.
Marios, thanks so much. This was the Weekly Forex Outlook here at xm.com.